I think it's going to be a musical chairs. I think the music's going to stop one day, and somebody's going to have to come out and say, "Man, we're going to have to derate these reactors because we screwed up. We didn't procure our uranium like we thought. We made a mistake." I think some utility in the world is going to end up having to do that, and I think it's just going to it's going to like hit people in the head. Hey, there's not. I mean, the reports I listened to from people that went to the WNA, these fuel buyers still think that there's this like unlimited amount of uranium out there.
Hmm.
I mean, we're in a precious metals bull market, and historically, silver always underperforms gold initially, and near the end of the run, silver then begins to outperform gold. I mean, silver kind of is. I mean, both all these precious metals still are like are being ignored.
Hey guys, welcome back to Capital Cosm. Today we've got John Polomny back on the show. Really happy to have you on, John.
Oh, thanks for inviting me, Danny. Appreciate it.
Yeah, definitely. Before we get started, guys, I'd like to remind you to check out our Substack, capitalcosm.substack.com, for the full interview of my talk here with John, as well as a bunch of other perks, including market write-ups and your opportunity to ask questions to all of my upcoming guests, and so much more. So if you haven't checked out the Substack, be sure to check it out. Link is down below. So John, let's go ahead and dive right in. What is your kind of like your 30,000 foot view of the economy? I asked this question to all my guests to kick things off. I want to get what's front and center for you right now, and then we can kind of hone in on specifics and pull on some strings. What do you see out there?
Well, I mean, if you want to talk about the economy specifically, I'm not a macro analyst. I don't purport to be, but my view is it's a bifurcated economy. If you have money, if you have wealth, if you've benefited from the previous regimes of money printing and Cantillon effect of being close to the money printer, you've done very well, and you're continuing to do well. That's a small portion of the population. I mean, we see it in TSA, record numbers of travelers. We have people traveling. It's not the 50% or less or more of the working population that's struggling. So I think there's a bifurcated economy here in the U.S. or in the West in general, where you have people that have assets and have benefited and are continuing to benefit from what basically is the Cantillon effect and the money printing that continues to go on, and debasing of currencies that's benefited asset holders. And then you have the rest of the economy that are wage earners and people that don't have access to the money print, aren't close to the money printing machine, and working for wages, who are falling behind. And so that's how I kind of see it. That's why I think there's a lot of confusion around a lot of the numbers. I don't want to get into conspiracy theories, but you see the revisions in the unemployment every month. They'll tout a good unemployment report one month, and then in the subsequent month they will report another good number, and then you have to read the bottom paragraphs where they have revised the previous month's numbers down. So I think we're in an election year. I think the deficit, the new fiscal year starts October 1st. The deficit for 2024 fiscal year will be $1.9 trillion, 7% of GDP. So yeah, I can make the economy look good too if I spend 7% of GDP deficit spend on all kinds of central planning boondoggles, like trying to bring chips back to the U.S. and these other schemes. So I think that's how I look at it. I don't think the old rules apply where, okay, you raise rates and then the economy rolls over, and then we go into this recession, and then they cut rates and we come back. I think we're in this kind of bifurcated economy now where I think some people that are a lot smarter than me have described it as fiscal dominance. And so I think that that's kind of how I look at it right now, because you can see pockets where things are fine and doing well, and there are labor shortages. And then you look at other people in other sectors and working people, people that don't have assets, and they're struggling. I mean, 25-30% inflation over the last 4 years. And then the Fed, I mean, the gall that these people have in the news media and these politicians and these Federal Reserve central planners that say, well, inflation's down now. Yeah, but it's once inflation goes up, it doesn't if it drops from 9% to 2% or whatever it's at, 3%, that's not a big feat. You're still have these built-in higher prices now, and obviously, if you're a wage earner, wages haven't kept up, so you're struggling. That's kind of my 30,000-foot view of the economy as it stands right now. The only thing I would add, I mean, maybe this is a follow-on question, but I thought it was interesting if the economy's doing so well, then why did the Federal Reserve feel the need to cut 50 basis points last week? I've talked about this a lot on my channel. You know, I've talked about what I call the bazookas, the big central banks, because I believe in the short and medium term liquidity and sentiment is what drives markets. And you can use Cuppy's term, Project Zimbabwe, what I like to call it Money Fest 2024. You basically have just about every central bank in the world now cutting rates, with the exception of maybe, especially the G7 countries. Japan is the only country raising rates, and that's slightly. So, we're setting ourselves up for a reflation now when we really haven't conquered the previous bout of inflation. We saw that before in previous decades, like in the 70s or the 40s. So, yeah, I think that I think this is going to has the potential to become a problem, but we'll have to see how it goes forward. But definitely, if you have assets and you have a good job in a good industry, you're doing well. And if you don't, if you're just a regular schlub working for wages, then your life is not good right now.
Yeah, just piggybacking off of your comments regarding the 50 basis point cut, we had a similar 50 basis point cut back in '07, and we saw what happened after that, right? Now, the market seemed to be eating it up, but and you mentioned asset prices, going up. How, is this just kind of like a sugar high in your opinion? Do you think that, the markets have a lot of runway ahead? How do you view the markets? The economy is one thing. People often conflate the economy with the markets. They're two separate entities. What do you make of the markets and their reaction to the 50 basis point move, short term and, moving out into the future?
Well, obviously, I mean, we because it's unfortunate that market participants and the public in general has such confidence. We shouldn't even be talking about the Federal Reserve. We shouldn't even know who the Federal Reserve Board of Governors are or the chairman. What they should do, like Milton Friedman said, they should just take their cues off the 2-year Treasury note. But that, these are central planners in a politicized entity. That's a whole other discussion. And so, what do I think? Well, people smarter than me, and I've highlighted on my channel, whether it's GMO, Grantham Shop, or other shops, have shown what has happened during previous rate cutting cycles. And if you cut rates, typically, why does the central bank cutting rates? Typically because the economy is weakening, or there's some type of train wreck, banking crisis, some type of financial crisis. Okay. And so there have been periods in the past where the Federal Reserve has cut rates because real rates are too high. So and the economy has not been in a recession. And that slim, very rare occurrence that happens, the market has a year later been up and done very well and done fairly well, like 15 to 20% returns. But that doesn't happen that often. Typically what happens is people do get this sugar high or this period of time where, okay, they're cutting rates, like Pavlov's dog, let's go back to the well. And then, but they find out that, and I don't have all the dates, but this can be searched on the internet. People have done all this research already. You can go back and look at every rate cut. I think even Investopedia has an article on this and shows you each recession, each rate cut cycle going back to like the 50s and what was the subsequent returns on the S&P 500. And so, yeah, I mean, I think that the sector that has been leading the market the most, which is this whole AI tech thing, is nothing different than what I saw in 2000 with the internet bubble and what happened before that, or 2008 in housing, 2000 in the internet bubble, 1970s with the Nifty 50. John sells overvaluation and buys undervaluation. And so I think that there's going to be a rotation out of these things. I do think that the economy is not as healthy as people think, and so I'm not, again, trying to predict the economy and things like that is kind of a mug's game. But with this new liquidity cycle that they've started, and remember, this is not just the United States. This is the entire world now. I track these interest rates, and it's amazing. I mean, weekly of 140 different central banks, and we have this basically everybody around the world is doing the same thing. So I expect this tailwind of liquidity to be very good for certain asset classes. Maybe the stock market, I don't know. It's difficult to say, but you know, I look at this as from probabilities. What has happened in the past? So if we have a recession, if the economy is weakening, if it's going to weaken, then likely that the market will roll over. But we have overvalued markets. My own view is that kind of this whole AI situation has been overhyped. Now you're starting to see this happens all the time. I think what you're going to see happen is there's some allegations that NVIDIA has just a certain amount of small amount of customers. They've been doing vendor stuff in channels, basically. I'm not accusing anybody of illegal activities, but look at the CEO. He's been selling stock. Okay. Who knows these companies better? The people that are running them. So, I kind of go back to, I think that these things, even if they do turn out to be, I think it would be, without a doubt, we would all agree that the internet has changed the world. But some of the initial players that were around in 1998, 99, and 2000 don't even exist anymore. And I think something similar is going to happen here. And I think if something like that, I think this thing's going to roll over, and I think you're going to see a rotation. Now, the money printing is going to continue. The liquidity event infused into the world economy, I think it's going to be very beneficial to the resource sector. And we already have a setup for that. We're at like all-time lows for resource valuations vis-a-vis equities. So that's positive. Sentiment is kind of negative, I would say, towards, resources. We have this liquidity tailwind. So I think a lot of things are setting up, plus the fact that, we are going through a major geopolitical change in this world. We are seeing a baton being passed from a previous hegemon, being the Western Atlanticist hegemon, to the BRICS, whether people like it or not. All of the facts are there. So I just think that there's a lot of tailwinds for, there's always going to be opportunity somewhere. And so I think that, I just think the script's going to flip. And I just see so many things lining up for the sectors that I don't want to just say in general commodities, but certain resources, the underinvestment that's happened. And I think there's going to be a huge opportunity for in certain sectors as we see a rotation. And that's what's going to happen. I think, as capital you don't need a lot of capital rotate out of what's hot now into some of these undervalued sectors for them to move greatly. So that's what I've seen in the past happen. That's what happened in 2008. I mean, the Fed, here's the other thing. You're having one more thing I'll mention, then I'll stop because I'm kind of rambling a little bit. But the narrative is that we're going to have a soft landing. We never have a soft landing. Okay. I think there was one soft landing that during the Greenspan years. I read. Again, I asked people to go back and do their own research to all the Fed cutting. So there's plenty of articles. That's the good thing about the internet. All this research has been done for you by smarter people, and they've written all kinds of papers on it. You can go read it yourself, and then it's a probability thing. It's like playing cards. If I get two aces and I'm in position, I know what the percentage chance of me winning the hand is if I play 10,000 hands. Any single hand I can lose, obviously. On a bad beat, but certain cards should be played a certain way. You're going to have an overall win rate. So it's kind of the same thing here. Do you want to buy overvalued tech stocks in a sector that's overvalued? And even if it does perform like everybody says, it's already priced into the securities. I mean, how high is NVIDIA going to go? I mean, we already see what the problem is here. Where's the power going to come from? How many billions of dollars just to program these AI? I mean, I've listened to a couple of people that are way smarter than me on this. I mean, how do you make money on this? This was the same. It's not clear right now. I'm not saying it won't happen, but it's the same thing that happened during the internet boom. People would ask the same question. We can see that this is going to be a major deal, but how you make money on it and who are going to be the winners. And the people that are in the leadership right now, I think you have to go through an initial bust, and then you go, and then leaders emerge over time, but I think that overvaluation is going to get corrected. That's my view right now. And I just think you have so many tailwinds now that have lined up for certain sectors in the resource market that I think there's tremendous opportunity here.
Yeah, so I mean, let's dig into that. Who do you think comes out as some of the biggest winners out there from the commodity space? And also to dovetail off of that, uh, who do you think comes out of it as a loser? Obviously some of these commodities won't rise with, their counterparts. Who are the biggest winners and who are the biggest losers within the commodity space to benefit off of what's to come?
So I hate to be a broken record, but I just think the news that we've seen over the last 6 months in uranium, I mean, I can't get away from it. I mean,
Mm.
uh, just, you basically have now what I thought would happen. You have a situation, for example, where Bill Gates is trying to build this SMR out in Wyoming. And, it'll get done, but why not bring 3 Mile Island back? Well, that's what they're going to do. I mean, they're working a deal with Constellation Energy. It's an $18 billion PPA potentially. Okay. We've already seen Amazon do this. We saw another announcement where last week where BlackRock and Microsoft, $100 billion being committed to data centers and energy. Okay. And so that's going to be nuclear. Now, longer term, initially, that's going to benefit what? I'm taking a look at, I just happened to go look at GE Verona, which is the old GE Power when they split GE. They're raising production of heavy gas turbines now. Why? Because it's very simple. Gas is cheap in the US. Building a gas turbine cogeneration plant takes a year and a half. You can cookie cutter these things. And so they're raising their heavy gas turbine production in anticipation of this stuff. So again, I caution people, I'm positive on these things, but you can't be literally extrapolate, that's what happened with EVs and all these things. But these things are going to happen. But I think there's going to be tremendous opportunity because we're just short of electricity. And so I think there's an opportunity there. I mean, look at a stock like, I'm not advocating this stuff, but look at a chart of like an Eaton. All Eaton makes is breakers, load centers, okay, and stuff like transformers. And the stock is like, they're riding this trend. So I think, this whole energy, electrification, power needs are really going to be tremendous. And then, then I didn't have a chance to look at the video today, but evidently Buffett came out today, was on CNBC talking about nuclear power and energy. So you can see what's happening here. I mean, Jennifer Grantham, who's a moron, somebody gave her a talking point. She's the energy secretary. When she went to Plant Vogtle when they had the commissioning, which is the most recent nuclear plants that were commissioned here in the U.S., 6 months or a year ago, she said, we need to build 99 more of these. This is the first we need 99 more. Well, 99 more 1,000 megawatt nuclear plants. Yeah, that'd be terrific. So, I mean, I'm very bullish on uranium. I think.
Hey guys, quick pause. If you're enjoying this content and this channel as a whole, but want to take the experience up a notch, then consider joining Capital Club here on Substack for only 22 cents a day. You get access to exclusive portions of my interviews that you won't find on YouTube. You'll have the opportunity to ask my upcoming guests a question. You'll also get the chance to recommend me guests. You'll get a chance to DM me. My DMs are open on Substack for paying members only. Talk about whatever you want to talk about. And we also do market write-ups. You can get my opinion on what I see going on in the markets. So lock in your price today at 22 cents a day. And with that said, I'll let you get back to the video. Thanks, guys.
It's the long-term solution. You're not going to, burn coal indefinitely. And the bottom line is no one is opening any uranium mines. You have a built-in supply and demand deficit, depending on how you want to listen to, anywhere from 30 to 50 million pounds a year. And where's the billions of dollars of investment to get these new mines up and running? So it's not happening, but yeah, we're getting more and more demand. So I'm very bullish on uranium. The only thing that derails it in my mind is some kind of Chernobyl thing, but that doesn't even derail it. I mean, you'd have to sell on an event like that, but it would just be like Fukushima. The world has no choice. That is the future. And so I think it has tremendous opportunity. And then obviously I'm bullish on gold. Gold has broken out now. I'm not a guy that draws crayons on a chart, but I do know what a cup and handle chart looks like. This is a multi-year cup and handle that has resolved and broken out to the upside. This is a tremendous setup, okay? That doesn't mean you go out and buy it tomorrow and then it moonshots. I think, I don't like to make predictions on prices, but, the United States has a lot of problems physically. They're going to have to print money. The whole, I put a chart on my last video last week. The world in total, these governments have $300 trillion in debt. It's going straight up almost, okay? This is only going to resolve one way if you look at history. Currency debasement. Gold is a currency. Ray Dalio has a 2-minute video that people should watch about why you should own gold in your portfolio. And when he gave the reason in front of a bunch of people that should know better, they all laughed at him. But he wasn't laughing when he said you should put, he puts 5 to 10% of his wealth into physical gold. So it's a currency. It's been money the entire history of mankind. It's a perfect money. If you go and read Aristotle's, he has a writings on what money is. People should understand what money is. I'm sympathetic to Bitcoin. I like any currency that can't be inflated away by sociopaths in government or in central banks. And I think that has a tremendous opportunity. And something's happening there. And you layer on top of the money fest that's going on, the printing that's going to be going on, this geopolitical. I mean, all the power and all the gold is moving from west to east. I mean, I say this all the time, and economic power, geopolitical power. I hate to use cliches, but he who holds the gold makes the rules. I mean, it's China, India, all these countries. The worst thing I think historically people are going to write books about. The worst decision that was made by the United States probably in the last 50 years, besides going off the gold standard or having direct election of senators or whatever, all these different things, is the fact that basically kicking Russia out of the SWIFT. Okay, that sent a message to everybody else around the world. Hey, wait a minute. They will use their dollar. They will use their power financially to go after any enemy. I mean, there was a chart in the FT a month ago. The United States has 60% of the developing countries in the world under some type of sanctions. This is not, this people are going to be like, why would anybody buy treasuries or hold dollars long term? Now, look, the dollar is the reserve currency. It will continue to be. But, if you don't maintain your house, it starts to erode over time. It starts to become decrepit. You have to do maintenance. You have to, you have to have policies in a country that allow for it. People to have confidence. These are confidence games, these paper currencies. And if you allow it to be eroded over time and then do deliberate things like we're doing, I would suggest to you that over the long term, I mean, gold's up 25% this year. No one's talking about it. I mean, yeah, we talk about it on these channels and stuff, but the mainstream, they don't mention it. Look at what gold stocks. People don't believe that this is real, what's happening. So I'm very bullish on gold. I'm very bullish on copper. I think they have opportunities there, and I'm quite bullish on coal still. I mean, specifically met coal. I mean, rust is your friend. Steel making still use the Bessemer blast furnace. They have to use met coal to make coke to use in the steel making process. So that's going to continue. So I think there's opportunities there. Things I think faddish type things you have to look out for. You saw what kind of recently lithium kind of blew up recently, right? It was doing well. I remember buying some of these lithium companies years ago, and I had sold them, and then it became a bubble. But the EV projection, some of the stuff didn't pan out. You see what I'm saying? So you have to really, again, it goes back to what Rick Rulis said. I say the masters of commodity cycles is a company called Altius Minerals. They're a royalty company that was in Canada that still exists, and they used to talk about how they've basically mastered commodity cycle for each individual commodity. And so that's what you have to do. You have to understand what the cyclicality is of copper, which is different from the cyclicality of agricultural, and what drives these things. And then I think you can kind of understand and set yourself up for success. You can't just do a blanket thing, just buy DBA and you'll be fine. I think to really make the big money, you really have to understand what's going on in these individual markets to a certain extent, what's inside your circle of competence. And I think that, but I think you're going to have such a tailwind behind over the next couple of years as this, you have just about every central bank in the world cutting rates. I mean, it's just inevitable what's going to happen to commodity prices. You're going to see it trickle in. Watch the PMIs. S&P has a website. Just put it in there, global PMIs. Watch the different purchasing manager index for manufacturing services. You're going to start seeing it creep up. If it's above 50, that means expansion. You can do the work. You can look at what happens when PMIs get above 50, start expanding. You'll start seeing copper prices and other things historically increase. So, and again, another one of the major tailwinds is the underinvestment. So all these things have been underinvested in. So I think there's tremendous opportunity in some of these things, but I think you got to be careful. I mean, I think people try to get too cute. I was listening to a podcast the other day, and people were like, yeah, antimony prices and tungsten prices. I mean, how do you deal with this as a person listening to this podcast? You can't. You can go out and find a miner of antimony. I'm sure make a deal where you can buy it and then store it somewhere. But that's not going to happen for the average person. So I think that I think you got to be a little bit cautious on that. There's enough to do. There's enough species of fish to fish for that you don't have to try to catch every fish. I'm very bullish on platinum. I'm acquiring. I don't mess around with this. Everybody's on this South African mining. I can't even pronounce it. I can't even, and they found out that just because something's cheap doesn't mean it can't get cheaper. Just buy platinum. Get on a purchase program. Devote so much money a month. It's 17 more times more rare than gold. EVs are not going to take the world over. We're going to go through another, automobiles are some of the oldest they've ever been in the Western world. People are going to sell cars and they're going to have to put catalytic converters on them. And it's the same situation. There's not enough platinum in the world. So just buy the metal. People want, the problem here, Danny, is, and I'm rambling, one more thing and I'll stop, take a breath. People want to get rich quick. That's the problem. If you look at Ronnie Stoiffel's work he does in Gold We Trust, he puts a thing together, how much gold has went up each year in different currencies. Basically gold's basically outperformed, I'm sure, most people's portfolio over the last 10 or 15 years at least. Just buy the metals in some. If you're bullish on a metal, buy the metal. People say, well, what copper? Just buy Glencore. They're the best at, they stole Teck Resources, met coal resources based operation for them. It's going to cash flow $1 billion a year eventually. They got this, they know what they're doing. And but John, it won't go up 1,000%. Well, you'll compound your wealth over time as we go through the next decade. You'll be fine. But that's not what people want to do. They want, give me the junior mining company that's going to go from 10 cents to $10 so I can put $1,000 into it and become a millionaire. Well, that's not how this really works, in my opinion. All right, I'll take a breath. Sorry.
No, I think I heard it from you at one, on one of your videos, and that is people are trying to hit home runs and grand slams on every attempt at bat. But really, I mean, you should be looking towards singles and doubles. That's how you chip away, at this market and make a healthy profit for yourself. Not everything has to be a home run or a grand slam, like a 10x or a 100x, but it's a conglomeration of multiple good moves that can kind of move you.
That's exactly right. I mean, I tell people this all the time. I learned my lesson the hard way. I'm 57 now. I should already be retired. You shouldn't even know who I am. I should be that guy that you heard about that lives in the Cayman Islands now. Because for about 10 or 15 years, 20 years when I first started out, I was always trying to hit the grand slams. I was going to find that junior miner, okay, chasing that rainbow. And sometimes it worked, but sometimes it didn't. And then I finally realized, look at my returns. So who are the wealthy? If you want to play this game like that's played, you got to play it like Marin Katusa and Doug Casey and Rick Rule. You have to be an accredited investor. You got to go there and meet these people, and then you got to participate in the private placements. That's how the money's made. So that when these guys are investing into a resource sector that's undervalued and they're getting a share of stock and a warrant, they sell the stock immediately and hold the warrant. You do this over 10 or 15 companies. That's how this is really played by people that really know what they're doing. Screwing around as a punter in buying junior mining stocks. I tell everybody, if you're going to do this, go to one of these resource conferences and get exposed to the hall of companies. Everybody there's got a story. Everybody's going to tell you, and believe me, you really got to have your shields up because you got people that know how to talk. Okay. And so again, it's just all about compounding wealth over time consistently. And you can get very wealthy that way. There's many people, Walter Schloss, Buffett, Munger, all these people, Howard Marks, all these people have laid it out. You don't have to hit the home run. Rod Carew and Tony Gwynn are in the Hall of Fame, and they just hit singles and doubles. So there you go. I fully agree with that. And I think that as a retail investor, your advantage is that you have the ability, you're not being held to some uh, board of directors or something. You can be patient. You can identify a sector, and if it takes, you thought it would take 2 or 3 years, and it takes 5, you can still. Your advantage is patience. Okay, and you have the patience to, if you have your thesis right, just you will get paid off. It's just, and things, I throw these little quips out there. Things always take longer than you think they're going to take. Things are never as bad as you think, and things are never as good as you think. So I think that, and if you cast your net wide, I'm not saying don't. There's a time, to buy in some of these junior stocks. It's like people are like still talking about these. I mean, people were getting ready to commit ritual seppuku over the last few months in the uranium market. People throwing their hands up on X. I'm out of this. I'm swearing this off. I love it when I see that. That's when I started buying.
Now
I'm
was the
not
bottom,
buying.
right?
Yeah, I'm not buying crap juniors. It's time to be buying the producers, people that are bringing projects on or have projects that are going to be able to sell increasing amounts of uranium, mostly these brownfield projects, into a rising uranium market. That's what you should be buying. You got another bite at the apple. They were overvalued 6 months, 8 months, a year ago when everybody was buying them. Now they got blown out recently. Now I think we've bought them. You're right. They've been up just on the news. It's so, that's what you have to do. You have to be patient. You have to wait for that deer to get close enough and take your shot. And so all these guys now, I was just shocked. People that I actually had respect for throwing in the towel. They just don't get it. They haven't conquered the psychology and the emotional portion of this. And this is why, most people. There was a guy who ran a hedge fund. I put the paper up. I'll try to find it again. People should really read it. He said the title of it was, he was given to this group of Harvard MBA graduates, students. And he said, "So you want to be Warren Buffett," was the title of it. And it basically explained to them why they wouldn't be able to beat the market. And it always comes down to a couple things. Psychology. It's not hard to find the setups. Everybody knows uranium's in a deficit. Okay. But people don't have the psychological makeup, the emotional makeup. And I'm not criticizing people. I'm not dogging people out. You can hone that, but it's hard. Some people really. I get emails and are you still in uranium? Why are you still in uranium? Are you crazy? I can't take it anymore. Well, it's not like you're being tortured. Just but if you're to that point, you have to sell because you just, but you're not going to. I'm just using uranium as an example. This applies to all kinds of sectors, and it's the same thing on the other side. People buy at the top, right? They when uranium spiked to 106, the sentiment was out of control on FinTwit, and so I think conquering that is a big portion of this. You have to just be able to know yourself and keep some dry powder. And these opportunities come along, and nothing has really changed fundamentally. So if the price gets cut in half, I have to be a buyer. And that's some of these stocks were down 50% or more that are like legitimate companies that are going to be cash flowing. So, it's I think that was just a tremendous opportunity to get another bite at the apple.
Yeah, I mean, nothing has really changed in the uranium story aside from this 3 Mile Island news, breaking news that we heard from last week. But even so, the price fluctuates up and down. Um, so you do think we kind of hit a bottom there with sentiment and price?
Well, I do because I was buying. I mean, but who knows? I'm not a fortune teller, but when you see sentiment that negative in good companies that I wanted to own, but I thought were a little bit too expensive 6 months ago, cut in half, then I have to be a buyer. I mean, I'll just throw a name out there. It's not in my portfolio on the newsletter, but I love this. I love um, um, Encore Energy. I love Bob Sheriff. I think he's a tremendous uranium executive, and I think they have two mines up and running here in Texas. They're working on their other mine up in I think it's South Dakota. It's not going to be the next Cameco, okay? But these people are real uranium mining men that know their niche of ISR, and they have done everything. This is the model kind of company you want to be involved with. They said what they were going to do, bringing these brownfield projects back online. They did it. They're increasing production. You know, what else is there to say? That's what you should be looking for. So if a stock like that gets cut in half, I think it was down 30 or 40, maybe even 50%. Of course, I had a small starter position. I added to it tremendously because I have to, because these guys are going to be increasing their production of uranium going into a rising uranium market. This is what you want to own now. I'm not saying you shouldn't, maybe take a few punts here and there with some junior, but this is what I want to own at this stage of this market, that kind of company.
Right,
Okay.
right. And you,
I don't want to be, yeah, go ahead.
no, I was just gonna say, go ahead and finish your thought because we're gonna pivot over to gold and silver in a second.
No, I mean that's pretty much all I had to say. I mean, I think that's, you have to know where you're at the cycle. The time to just be buying all the 5 cent and 10 cent stocks you could get, was 5 years ago. That's kind of over with now. Those were long-term, never running out options, and now you have to refine there's a maturation process now, and so, I don't know how high uranium is going to go. I think personally that I think it's going to be a musical chairs. I think the music's going to stop one day, and somebody's going to have to come out and say, "Man, we're going to have to derate these reactors because we screwed up. We didn't procure our uranium like we thought. We made a mistake." I think some utility in the world is going to end up having to do that, and I think it's just going to it's going to like hit people in the head. Hey, there's not. I mean, the reports I listened to from people that went to the WNA, these fuel buyers still think that there's this like unlimited amount of uranium out there.
Hmm.
I mean, if you talk to the different guys that were there, they're just like people still don't get it, and so we'll see. I guess and I don't care what the spot price is. I focus on the term price, the conversion. All these things are going up over time. Somebody posted a chart on Twitter of the term price by month. It hasn't went down in like 18 months. Okay, the contracts are being signed at higher and higher levels. Okay, people are holding off from signing. I mean, because they think that, well, the price is going to come down or whatever. It's not going to come down. It's not going to crash unless you have a Chernobyl or, some major accident. I mean, I don't know how to make it any obvious. There's not enough uranium for the reactors that are running, and everybody's building more. And then you have the United States government basically shooting itself in its own foot with all, Kazatomprom basically, yeah, I believe this. Yeah, it's kind of too expensive to ship stuff through Azerbaijan to the West anymore. Really? It wasn't a problem for the last 20 years. All of a sudden, it's a problem. All that material's going to Russia and China because the world's bifurcating. That'd be like Saudi Arabia saying, "Yeah, you know what? We're not going to export oil to the West anymore because it's too far." I mean, the price would double. Then I mean, oil would be $200 a barrel the next day. So I think people just don't understand, or people want to get rich quick. They don't want to get rich slow. That's the problem. I mean, that's basically the problem. Anyways,
Yeah, yeah. I mean, totally. People are always looking for the shortcuts, and it's it you can't be contrarian if you're just always buying at the top or during times of high sentiment by definition, right? Um, so gold and silver, however, gold continues to make new all-time highs, as you made mention of. We're up 25% year to date. Silver, however, is still about 40% off its all-time high, but it's still done a very had a very good year under its on its books. So why is it that silver still hasn't begun to outperform gold in your opinion? What's keeping silver at bay?
I mean, I don't know the intricacies of the silver market. What I do know is that we're we're in a precious metals bull market, and historically, silver always underperforms gold initially, and near the end of the run, silver then begins to outperform gold. Um, I mean, silver kind of is. I mean, both all these precious metals still are like, are being ignored. So silver is really a hybrid, right? Because it has served as a monetary metal, but it also has an industrial component. And people really need to pay attention to, like, there's not that many primary silver mines. Most of the silver production is a byproduct of other base metal mining, copper specifically. So, I mean, I don't know the intricacies of, I do know that the more solar panels they built and the more usage for this stuff over time, it's going to become the FOMO trade again. So, I mean, if gold goes higher, silver's going to follow along. It's going to underperform as it typically does. And then near the end of this precious metals run, whenever it is 3, 5, or 10 years, you're going to see it typically outperforms at the latter half of a precious metals bull market. Why is it not? Why is it underperforming now? I have no earthly idea. People should be buying it because all of these metals are not, are going to become the focus of a lot of fund flows. Let's put it that way, and they're going to become the new FOMO at some point. So I don't know. You can listen to people that are more schooled in this. I don't really listen to a lot of people anymore about. There's certain guys have been out there about manipulate. I mean, it's all very possible. It doesn't matter because when the fund flows get where they're going to end up on this deal, I mean, if gold continues to make new highs, silver's not going to languish. It's not going to happen. So again, I mentioned platinum. I'm more bullish on platinum than I am gold and silver. I mean, it's 17 times more rare than gold. The majority of the production comes out of South Africa, for heaven's sakes. I mean, and then as a byproduct of, nickel mining in Russia, there's some small that should tell you everything you need to know about, what's undervalued. So why these things don't respond immediately as we think they should. Uh, I had to hold uranium even when it was in deficit for 3 or 4 years. It didn't do anything. And all of a sudden, you wake up one day and it breaks out to the upside and becomes focus of interest. It's difficult to say. I gave up trying to predict these things because I know it's interesting for people to. There's a lot of this type of what I call, whatever you want to call it, uranium porn, gold porn. People they want
People want
entertainment. They
narrative,
want to,
yeah.
yeah. And so I have no idea. I look for things that are undervalued and that I just know that I have to wait for them to become uh, valued correctly, and then it's subsequent, hopefully overvalued at some point. And I think a lot of it has to do with sentiment and fund flows. Uh, that's just basically what it comes down to. I mean, there's, people, you've heard people talk, well, if you look at the premiums, I don't get into all that. I just know that, uh, we're probably in a precious metals bull market that's multi-year, and I think that you should be chipping away and stacking this stuff.
John, where can people find you?
So everybody knows I have the YouTube channel. We do the weekly market update where we just talk about whatever's going on in the world uh, with these themes that we're talking about on here. And then I have a Substack, which is doing very well. I put out a weekly free email where we go into a little bit more depth in what I'm reading, consuming for media and podcasts and what have you. Then we have the paid newsletter where if people want specific ideas, this is basically what I'm doing with my own portfolio. I own everything that's in there, and then that's done fairly well. And that can all be just go on YouTube and or put my name in Google. All this stuff will pop up. I don't hide behind pseudonyms, so I'm
Gotcha.
out there.
Yeah, out in the open. Well, hey guys, if you enjoyed this interview, be sure to subscribe to our Substack to watch the full interview, to watch part 2 of our talk with John Polomny. And also, don't forget to subscribe to our channel. A little bit goes a long way. All very much appreciated. And I'll catch you in the next episode. Bye, y'all.
All of these things are going to go higher. Now, every central bank in the world is cutting rates. I mean, it's just the pig has to move through the python now. There's going to be a lag effect, and all these things. I go back to what Milton Friedman said. Inflation is everywhere and always a monetary phenomenon. So we're going to see economic activity is going to go higher over time. PMIs are going to go into expansion. That's going to require more raw materials. There's been underinvestment. And then, maybe you'll have me on a year from now and say, why is oil at $105 a barrel? And it'll be